2024 looks like it's going to be a fantastic year for the stock market. In this video, I want to go over why that is and all the good news that will probably cause new stock market highs. I also want to go over a couple of the potential headwinds that could derail all of this. And then I want to go over what I think is the absolute best ETF for anyone wanting to take advantage of the stock market, especially in 2024. Hey everyone, as always, my name is Derek and I got my degree in finance, so you don't have to. Let's get right into the video. So before we get into the fundamentals that can cause new highs in 2024, let's take a quick look at the technicals. By all intents and purposes, the lows are in. Now, Derek, this could change at any moment. Yes, that is true, but look closely at the downturn. Lower lows and lower highs. Now, look at the move up since October 2022. Higher lows and higher highs. Now, just purely from a technical standpoint, that is very good. Now, technicals are basically the pictures that fundamentals paint. So now let's look at the fundamentals, the actual driving forces behind the market. Here, things are looking very good as well, which leads me to believe that as long as we can avoid two major issues, stocks will continue higher in 2024. So let's talk about those fundamentals and then we'll cover the two potential problems. Stocks have been rallying basically all year, and you've probably noticed that in your own portfolio. And the main reason for that, above all else, is that the doom and gloom that was called for all of 2022 has not really materialized. The main one of those was recession. Many were calling for a recession, and it wasn't just going to be any recession. It was going to be a recession led by inflation. This is known as stagflation. Basically combining two very bad things that usually do not happen together: economic shrinking and inflation. This would and still can be detrimental to the economy, but so far we've managed to avoid it. And as painful as super high interest rates have been, they've really started to cut down on inflation. This by itself has restored a lot of confidence in the market. But that's not the only thing. Recession means job losses, and that also has not happened. In fact, when you look at the data, instead of seeing a spike in unemployment in 2023, which most definitely would have happened in a recession, you see basically some of the lowest unemployment rates in history. Now, of course, that doesn't tell the entire story, but what it does tell us is that even in a mild recession, there is a ton of margin available before businesses are affected. That's a good thing for businesses, employees, and consumer spending. And remember, consumer spending is the backbone of the economy, and indirectly the stock market as well. Not only that, but corporate profits are down, but not as bad as expected. And on top of that, there are new frontiers like artificial intelligence that are looking like they could be extremely profitable. And artificial intelligence could help lower labor costs for businesses as well. Now, I'm not saying that that's a good thing, but remember, this video is about the stock market. So we need to look at it from an investor's perspective, not an employee's perspective. Now, there are a lot of potential positives for the stock market, but let's go over one more major one before going over the headwinds that could cause problems for all this, and then we will go over what I think is the best ETF for you to take advantage of a potential upside in 2024. Anyways, one more major potential boost for the stock market is an end to the Federal Reserve's rate increases. And it looks like finally that may happen in 2024. Now remember, rate increases stop inflation, but they also hurt the stock market for many reasons. Just to list a few here quickly: more expensive money means higher debt payments for businesses. It means less money available to investors to invest in the market. It also means it's more expensive for companies to borrow to cover R&D, and it means higher cost of goods sold. I mean, the list is endless. So if we finally see a stoppage or even a reversal in the Fed's policy, that would most definitely push stocks higher, which I guess is the perfect thing to lead me to the two major potential threats that could ruin all of this. One is still a possible recession, and two is sticky inflation. Now let's cover sticky inflation first because it directly relates to the Fed's policy. If inflation proves to be sticky beyond a certain point, that would basically require a delay in a change of Fed policy. Basically, right now, it looks like high interest rates are working to bring down inflation. But remember, the federal target for inflation is around 2% per year. So if at any time during the journey down to that 2% target, inflation becomes sticky, as in it won't budge, let's say around 3.5%, the Fed may choose to delay further cuts or even increase interest rates to try and break through the wall of sticky inflation. That will most certainly affect stocks because it will ruin confidence, which can in turn cause a decline because we know most investors are pussies. Now, the second thing that could cause a problem for all this is an actual recession. There is currently less government spending. There is also a tighter credit market because of higher interest rates. And the economy is slowing down already. But remember, that by itself is not a recession, technically. A recession is negative growth, which some predict could happen in Q3 or Q4 of 2023. But even those who are calling for recession agree that it would most likely be short-lived. And since a technical recession is 2 quarters of negative growth, even in a worst-case scenario, we might not even enter one officially. So the other major threat then for stocks in 2024 is not just a recession, but a recession that lasts significantly longer than expected, because a mild recession is probably already priced into stocks. Now this, of course, is virtually impossible to predict with 100% certainty, and all we can do is place our cards as best as we can based on the more statistically likely outcome, which in my opinion is still up in 2024. So how do we go about investing in the right places to take advantage of this move, while still protecting us from the downside risk that still exists in a worst case scenario? Well, that brings me to the ETF that I think every single person should own. But to better understand, let me explain something. When the market is strong, say 2015 to 2020, it pays very well to pick individual stocks if you know what you're doing. That is because statistically, in a strong economy, they will outperform the general market. Fine. But when economic times are uncertain, as they are today, even if there is a higher chance of continued highs, it pays to diversify. And that goes even for the most well-versed of investors, because diversification is key to downside protection. So right now, for almost everyone, the best ETF to own is the Vanguard S&P 500 ETF, also known as the VOO, or something very similar like the IVV or the SPY. Now, there are times to be bold in your investing, and there are times to be wise. And while I think the outlook moving into 2024 is mostly positive, I'm less convinced that right now is a time to be bold and handpick stocks. I think right now is a time to position yourself well to take advantage of a move up while still protecting yourself in the event of a major recession. The VOO will do that. But you must also invest into it with money that you are comfortable not being able to touch for at least 5 years, because that is the only way that something like the VOO will protect you. Let me explain further. If you invest in company X and a recession happens and it goes bankrupt, you're fucked. But if you invest in a broad market ETF like the VOO, and then we enter into a recession, that ETF will still be here on the other side, and probably higher in price. But you have to weather the storm getting there if there's a storm. But hopefully there's not a storm, because right now 2024 is looking very juicy for the stock market. And it would really cramp my style if that doesn't happen. I hope this video was super informative, and I hope it gave you insight into the economic outlook for the rest of 2023 moving into 2024. This stuff has been my passion for over a decade, and I love being able to share it with you guys. So if you like investing and economics and personal finance in general, then you're in the right place, because that is all we do here. So feel free to subscribe if you haven't already, and make sure to turn on the bell notification so you don't miss the next video. And again, my name is Derek, and I got my degree in finance, so you don't have to, and I will see you in the next one.